We are in for a treat today. Two of the most influential investors and traders of our lifetime, Stanley Druckenmiller and Paul Tudor Jones. And can't wait to show you what they had to say. And most importantly, I want to show you what trades we can place to profit from their wisdom. So let's get to it. Can't wait to see what Stanley has to say about debt to GDP and the huge debt that the government has incurred in the last two administrations, and what effect that could have on our money and our investment. Well, I think we've had inflation for a long time, but now they can't hide it anymore because they spent so much money. They printed so much money in the last 8 years that the money supply just created inflation, and there's some more money to go around and less goods to buy, and less goods and services means more inflation, which is why we have to learn how to protect our investments, protect our wealth, to protect our family from what's happening right now. It's incredible how the US American homeowner was smart enough to realize that interest rates were so low that they refinance their homes and at very very low rates. And the US is very lucky because people can get 30-year fixed mortgages at a very low rate. And the US Treasury with Janet Yellen and had a chance to issue bonds. They 10 years, 20 years, 30 years, maybe issue a 100-year bond, who knows, at a very low interest rates, and refinance all the government debt, which is huge. And of course, right now, the interest payments are out of this world. They're becoming one of the biggest expense for the government, and it was a big missed opportunity. But the good news is American homeowners did take advantage of that, and that's why they're sitting in a much better position. What a great lesson from Stan, telling us to not let our biases affect our trading. Our trading has to be very cold, very analytical, very mathematical, and sometimes we let our biases affect our trading and our assumptions. So let's learn from the master and take his advice to heart. Well, what Stan's saying is that pretty much either Biden or Trump, they will spend a lot, they will create a lot of money supply, and that will turn into inflation, a lot of inflation, which is going to make everything more expensive. And the rich, the 1%, is going to get richer because they own assets, and the other people that don't own assets are going to be suffering. They're going to lose buying power, and they're going to be in the house of pain. Well, Stan thinks the market is expensive. It's trading 20 times earning instead of its average normal 15, and he thinks that equities are fairly valued or a little bit overvalued. So maybe the stock market won't move. Now let's take a look at the S&P 500 uh, chart that we have here. You can see it's been trading on a trading range from 40.50 to 46.50. So let's try to find a trade that matches Stanley's assumptions. And let's try to do a neutral trade on S&P, and let's try to maybe think of doing an iron. In order to match Stanley's assumptions, let's take a look at our Tasty Trade platform, which I love. Let's go out, 100 days to February, and let's see where the market expects the stocks to go. What I love about Tasty Trade, it shadows in brown where the expected move is thinking to go. So I like to place my long strikes at the end. 40.85 would be the long range, and I like to go 50 wide. Then I would sell the 41.35 put, and then on the other side, the market expects it to go around 46.30. So then I would buy the 46.40 call and sell the 45.90 for a 50 wide. And let's take a look at the chart. It looks pretty nice. It's a standard iron condor. It's a pretty delta neutral trade. It's only -3 deltas, and we need $2,800 of capital to make 2150. So that's a very very nice return and a nice trade with a nice probability of making money. So if you agree with Stan, this would be a nice trade to place on a market neutral environment. 2023 has been a very bullish year, but it's also been a very tradable year. Bulls have had a chance to make a lot of money. Bears have had a chance to make money or even get out of bad shorts. So it's interesting that Stan has not lost money shorting the market, a market that's up huge. That Hey, that's a lesson. What a good trader that on a huge up market has not lost money on his shorts. We can all learn from that. Now we're going to get into the good thing, the interesting thing, the bond market. Everybody has the bond trade on, and I can't wait to see how Stan, the man, is trading the bond market. And hopefully we can replicate his trade and see how we can put it in our own portfolios. So let's take a look at Stan's trade. He said he was short from May to July. Let's see what, let's, for example, the ETF TLT, what's going on. So in May, you can see here bonds were starting to go down a little bit. They peaked, and TLT was around 107, 108. And then he covered in July. In July, he probably covered a little before its time, but he made a killing. Of course, bonds kept going down after July, but who can pick a bottom? It's very hard. So Stan made a lot of money from his short from May to July. What's very interesting here is how an experienced and amazing trader like Druckenmiller turned his bond short into a steepener trade. That means he wants, the yield curve was inverted, and now he's thinking that rates will normalize. That means the long term trades are going to be higher than the short term trades, and that's why he did the steepener trade. Let me show you how to play the steepener trade in using our tasty trade. Wow, they're using all sorts of fancy words. The steepener. Steepener just means that they think the long part of the curve will go up faster than the short term. How do I achieve that? In the futures we have different types of futures. We have the ZT, which is the 2-year future. We have the ZF, that's a 5-year future. The ZN, that a lot of people trade, many of you guys trade, that's the 10-year, and the granddaddy of them all, the ZB, which is a 30-year bond. Now let's take a look at values. To trade one CT, the 2-year note, we need $1,200 of capital, of margin required. To trade the big daddy, the ZB, we need 4,200 of capital. So if we want to match apples with apples and have them merely the same size, we would do 3 to 4 contracts of the short end, which is the ZT, and then we would short one of the ZBs to have the Stanley Druckenmiller trade on. What I love about Tasty Trade, you can see here, they have a pairs trade. This is like a hedge fund, a system that they have here for dummies like me. And it's very easy to change. You can see I put a 4, the quantity that I wanted, and then 1 here, and that then I can match and I can have the same trade that Stanley Druckenmiller has on, which is absolutely. Stan just mentioned that he's not very excited about currencies or the US dollar. In my point of view, the US dollar is going to rock, and it has rocked. Let's take a look at the chart. And as you can see, the UUP has just been flying since July when. When Stan covered his bond short, and look what has happened to the dollar. When interest rates go up, the dollar shoots up. And this last 3 4 days, look at the big gap down. Why did it gap down? Because interest rates reversed. The 10-year went from almost 5% to 4.55, and that had a negative effect on the US dollar. I'm still bullish on the dollar. Stan is not very excited, but I think everybody should have some UUP in their portfolio because I think the dollar is going higher and much higher. Now let's take a look at gold and Bitcoin. Stanley said he likes both. I like both too. And here's the chart of gold. As you can see, gold is hitting almost $2,000. And everybody likes big round numbers. So FOMO is going to start to kick in if gold keeps going. And now let's take a look at Bitcoin. There's been a lot of rumors of the Bitcoin ETF. And take a look at this. Bitcoin was very stagnant, 26,000 for a long time this year, and all of a sudden, whammo bammo, the rumor mill hit, and Bitcoin is at 36,000. The year, remember, started almost at 15,000. Now we're at 36,000. So Bitcoin has been one of the best performing assets in 2023. And I am a big believer in digital assets, and I'm happy to see that Stan is a big believer. I want to give you my final thoughts on this unbelievable interview with two legends of the game and how we can apply it to our portfolios. So, to recap, Stan is neutral on stocks because he thinks they're overvalued or at least fair valued. The multiple is expensive, so we can play that by playing the S&P on a neutral basis. He is long the steepener. That means he is long the short end of the curve, and he's short the long end, meaning he is expecting yields on the longer term maturities to be higher than the short term. So we can play that. We saw it by being long the 2 year and being short either the ZN the 10 year or being short the ZB the 30 year. Depends on how aggressive you want to be. Of course, being short the ZB is much more aggressive than being short the ZN. And finally, Stan, because he's worried about inflation, he's worried about all the printing the government has done. He's long gold and he wants to get long Bitcoin. And so, wow, you see, we get information all the time from very valuable sources. This interview was unbelievable, and let's try to monetize it. Let's use our brains. Let's use our trading insights and everything we've learned to apply it to our portfolios, to protect our family, to grow our pile. And if you want to grow your pile and keep growing it, follow Uncle Tony. And remember, if you want to make buck like Stan and Paul Tudor Jones, you gotta risk it to get the biscuit, baby.